Elon again. It's always something with Elon. And Mark, you too? Jeez. Yeah, every time we check on China, it's always something bad. Hey guys, welcome back to the channel. We got a lot to talk about. And well, let's just dive in. So first, this is actually interesting. Elon Musk wants to bring back Vine. So for those of you who are big fans of Vine, you might get your old Vine back. I personally never really use Vine. I think I'm either too old or too young. I don't know, but I never use it. But hey, Elon's like, you know what? Let's do it. And I mean, more power to you if you think it's going to work. I'm losing my voice here. Vine's making me lose my voice. One of the things I think is kind of crazy, and I'm being just really objective, is Elon is pulling engineers from Tesla to work on the Twitter issue. And I get it, guys. I get it. People are like, oh, I love your speech. I'm all about Elon and stuff. But like, those same people are always telling you that, you know, Tesla's going to go to the moon and stuff like that. And here's the problem with this issue is he's pulling engineers from the AI division and putting him in on Twitter. And just like, let's check on Elon, see what he's doing. Elon, you got to stop doing this stuff, man. Take this stuff seriously. You're losing people money. You needed this guy. Anyway, you know, the other thing is too that we're talking about as well is I guess he's just like really, really tightening control, kicking out anyone who disagrees with him and trying to live in an echo chamber. And this becomes a problem when, you know, you only want your friends around you. And one of the things I recommend for anyone out there who wants to do business is, you know, have different opinions in the room, right? And so you have a better conversation. But for people like Elon who wants full control, you know, that's his thing. Now, what are the markets doing? Now, Morgan Stanley, there's a dude named Mike Wilson. And actually, I like the guy. So people say, hey, Chris, who do you like out there? People like this. Mike's not a bad guy. Now, he thinks the market can go up another 6% to the end of the year, is what he thinks, right? And then he says a year from now, then the earnings declines are really going to hit. So basically he's saying, you know, the market's going to float a little bit, and then we're going to hit the real pain. So we'll see. One of the things that I've been telling you guys, and it is how it is. I mean, the Fed is raising interest rates, so it's hard to be bullish on stocks. Although, yes, things could go up, and we certainly had a good October. Also be aware, Fed is going to be raising interest rates, and we have the results of the November election. So who knows in this market? I will say, you know, bonds are over 4%. Like, look at the 2 years, like 4.48, 10 years at 4.05. So, you know, just be diversified. And I think that's the best way to protect yourself. Be in good companies. If you want to be in stocks, have some cash, be in some bonds. And people who say only do stocks, they be crazy. That's what I say. Because I look at the S&P 500 and I'm looking at, you know, this is trading at 20, and this is the PE ratio that is. And for this to come lower number, lower is better. Either earnings of companies need to go up, or the price of stocks need to come down. And I just don't see either really happening. So I still feel like we're trading expensive. However, you still can make money in the market. It is very real. Like, look at this thing. So if anyone was in Getty Images, please share. This is just crazy. I guess it was going up, and then the meme stocks were also rallying with this thing. And as it turns out, Jim Cramer was pumping this thing. So let's check on Jim and see what he's doing. Jim, are you pumping again? Is this guy pumping again? Are you pumping again? I guess he was pumping again, guys. And actually, it's a real thing, though. It was up, 35%. So it like spiked up to like $7 some. And one thing that just my recommendation in this kind of market, if you got like this crazy returns, like 20, 30%, even, you know, 15%, take some money off the table and run. That's my recommendation. I don't think it's crazy because things are so volatile. What is the fair value of Getty is anyone's guess. Now, it is a profitable company, but you know, you look at this other kind of crazy stuff, like look at this GameStop thing. Basically, it spiked up from, you know, $30 or whatever it was to like 35-ish. In about a 10-minute span, and then went all the way down to 28. So it's scary out there. You can get burned on these things. I'm sure you guys who are watching this stuff will know about this stuff. And so to be careful. Yes, you can make money, but yes, you can also lose money. So just be careful. And for me, you know, and for regular people watching the channel, I just say be safe out there. It's just too much risk in the market. You know, one of the things too that's also going on is Biden is looking at increasing taxes on oil companies, which is a real thing. He's saying, yo, ramp up your production or we're going to just tax you crazy. And this is always tend to be in a political fight. Republicans tend to support the oil companies, Democrats tend to attack them. However, my personal opinion on this thing is energy independence is what we want. and what we should have in USA. And I'll leave it at that. So, taxes, whatever, I'll let other people argue about that, but I'm all about energy and independence. I don't want to be buying foreign oil from Saudis. And I keep saying this thing over and over again. I think the USA should, not only use our energies that we have, also develop new technologies, create American jobs, and make money doing that. I think that's a crazy thing to say. When I was checking on China, and every time we check on this, guys, it's like always bad news. Look at the headline. China's property crash sends billionaire founders heading to the exit. So what's going on is basically you have these billionaire owners of various firms. They're basically skipping town. And you can read one of these things here. For example, this particular person, it's Longfor Holdings. This is Wu Yanjun. And I was reading about this is that she's leaving, and I guess she lost, it says right here, two-thirds of her wealth, which is kind of crazy. Used to be the richest person in China, and now is losing two-thirds of her wealth. Although she's still worth 4.6 billion, but I think it'd be better to be worth 10, 12 billion would be better. So it is a real thing that the economy is slowing, and even the rich people are losing money. And basically, what's going on is this: people are just stepping down left and right and running away. And this is something that will happen that in this kind of environment, it's not just one or two companies. It's like all of them. People are just like, okay, time to get out. Goodbye. But nice knowing you. Also, too, in Hong Kong, the economy is slowing there. The GDP dropped 4.5%. And on top of that, you have, people resigning and the housing market crashing. This is a very serious thing. And like I said, every time I check on it, it's just like always bad news out of China. So I just don't know how people can be bullish on stuff. To be fair, yes, buy low, sell high. Yes, buy low, sell high. Absolutely, to be fair, right? So, and that's going to be different for everyone, what your risk tolerance is and what you think is going to come back. Because here's the risk, is that, yes, things will drop down, right? Lots of things will drop down. But not everything will come back, and that's where the risk is. This is another thing that's very much related. I keep mentioning it. So first we talked about trouble in China. Essentially, what's going on in China is people can't make bond payments, and I forgot to show you the details on that. This is the China one. Yeah, it's right here. This is one of the Greenland Holdings, what it's called. They said they're not going to be able to pay a $362 million outstanding bond. That's like a payment, on November 13th. So November 13th, they'll be like, yo, we don't have the $362 million. And that's in China. And then in Korea, this is going to sink the Korean market. Everyone's been complaining about it. The Legoland situation. Just bringing it up because it also deals with bonds and people not paying money. Now, speaking of which, this is a different issue. So people are losing money, and all thanks to Mark Zuckerberg. Basically, he's investing heavily on the metaverse. It's like all the gains of Meta in like the last 5 years are just wiped off the board. And things are bad is when, like in China, someone's losing 2/3 of their money. Other people, actually, we got to check on Mark. What's he doing there? Mark, you're just losing people's money, man. Get serious. Get your act together. You believe this guy? Come on. Anyway, so, those stuff like Mark, he could be right. Hey, you know what? I maybe we're going to, risk our 5 years of our last returns in the stock, but in the next, 50 years, we're going to be $1 bazillion. He could be right. And that's going to be up to you guys. Now, the one thing that's really ticking off investors is that Mark has 13% of the equity in the company, but has 54% of the voting rights. So just the way the stock share is structured, he's 13% owner, 54% of the votes. So you can imagine why people are ticked off. Because it's like you're just watching your money sink. And then, as you guys know, Brad Gerstner wrote a letter. We went over the letter on the channel, and basically he's saying, yo, cut it out. You can invest in metaverse, maybe $5 billion a year would be great, but don't be like throwing the whole farm and saying, and dude, and that's what Gershon was saying, is like, dude, even if you put in $5 billion, that's still a lot of money. So like, what are you doing? And basically the Meta people, what they're doing, they're having calls with all the rich shareholders, etc. And people are complaining, and because they own part of the company, but Mark owns 13%. However, he has 54% of the rights the way the deal is structured. And this other thing, too, we talked about it before, the affirmative action case in university admissions at the Supreme Court. So basically, most likely, affirmative action will be essentially kicked out of admissions policies at universities. However, the final decision probably won't be until June is what this is reported, but it looks like it's leaning that way. So anyway, I do appreciate you guys watching, and this has been your daily Uncut News.